week was it was a pretty wild week. It was a pretty wild week, but at the same time, in hindsight, it really wasn't. All right, so let's go ahead and explain how and what happened this week. So as you can see, this is the current week that happened this past week. And you guys know I have my dividers, my vertical lines that are purple. I divide the weeks up and show what happened individually in those single weeks. So this is what happened last week, the video we did a week ago. That's up on my YouTube channel right now. You can go look at it if you haven't seen it yet. And this is the week that we're on right now. All right, this is the week of March 18th to March 22nd, okay? March 18th to March 22nd, 2019. So what happened this week? As you can see, for the most part, the market was, I guess you can say it was more bullish, just visually looking at it, than bearish. When really, the exact opposite. You have more bearish movement going on, bearish action happening in the market. How about I say that? It's more bearish action happening in the market, because as you can see, when you got this little consolidation, so that doesn't count, then boom, you have this bearish dump, then you have this bearish dump. So I mean, if you add them together overall, if you include this too, that's what, that's 16. All right, 16 plus another 30, plus the correction. Yeah, about, let's see here, about 89, about 90. Okay, so mostly bearish action, and if you count just the bullish action that happened, which is right here, you got just 198. I'm sorry, just one move of 98 pips or whatever. So I mean, if you want to include that too, 98 added on to 27, you know, like I said, more bearish action. So I know last week when we discussed this, I basically was talking about this inverted head and shoulders and showing you guys all the signs and listening to all the signs why the market was going to fall this week. And then you see this happen. You're kind of like, oh, Devontae, what happened? I don't know if you know what you're doing. You know, so what happened this week basically was this. Myself included, with a lot of other traders, we got our ass whooped by the news this week. We got our ass whooped by the news this week because the FMOC, all right, you see this big old move right here. This is nothing but news. This is nothing but news. And as you can see, like I said, look, comparing the bearish and bullish action, the market was coming down anyway. Like, to the market, that's where the market wants to go. But because the FOMC came out, it pretty much pushed the market up a good 90 to 100 pips or so. And that kind of just threw the whole week off. All right. Of course, after, just like Forex, because it's technically driven, after some news, it's going to correct itself. So you can see right after that, within the hours, it started to come down and correct itself, so it can continue to move down. All right. But next, let's talk about what happened before that move. So right here, last week I said that the market was going to gap up to come down. So basically was saying that the market was going to open at a higher price than where it closed at last week and come down. So basically what happened is it didn't gap up. It went up to a higher price because, like I said, it has to have room to come down. And basically after that, it started doing this consolidation and formed this descending triangle right here. So like I said, the market came out. This is Monday, because you know Mondays and Fridays you don't trade because the market's trying to either catch its speed and figure out what it wants to do, and then Friday the markets are slowing down, coming to a halt. So those 2 days you're either, Friday you're exiting trades, Monday you're just observing the market. The times you actually execute these trades are Tuesday, Wednesday, Thursday. All right, so Monday you see the markets coming up, trying to make that formation, and then right when it came up here, I took in a sell, I think like late Monday, because I was looking at it and I already just knew that it was about to come down. All right, it was just my judgment call. Not really much technical analysis going on there, but it's just kind of like a trader's intuition, if that makes sense. Okay, so took a sell up here, and then after that I was in profit, and then after that I started to consolidate. Market started to consolidate, and at the time couldn't really see it, didn't know why it was going on. I just knew it was consolidation, but consolidation breakouts happen every time afterwards. So I was just waiting on that boom down. All right, and then sooner or later I got it. But the reason why I did that is because this is a triangle. It's a descending triangle. So on the 4 hour you can't really see it, but if we go down to the hour, you'll be able to see it better, and it's clear as day on the hour. So let me fix the chart first. So yeah, like I said, it is clear as day on the 1 hour. All right, and you can see you have the common ground here of the support, and then you have the markets making lower highs every single time. And if it's not that clear to you right now, with the candles, if you change to the line graph, you can see high up here, lower high, lower high, lower high. All right, and right here you see the common ground of that support. All right, so textbook descending triangle. Very textbook. So as you can see right here, boom. After the market was coming right here to the apex, the price was getting squeezed. That's what happens in triangles. It basically squeezes the price, just like a ketchup packet. You squeeze it hard enough for long enough, the ketchup got to go somewhere. It's too much pressure building up. So as you see right here, too much pressure is building up. Then boom, you got your butter. You got your burst right here. All right. Then the market came down. Everybody in the profit hunters, we was catching that move. I was on Instagram posting everything like that, and then it was beautiful. Like I said, everything was setting up, and everything that we were talking about based off our technical analysis was happening this week. The market was about to start its free fall. All right, and then after that volume, so we knew it was going to retrace to have a retest, and it was another reason why I was setting up beautiful was because of this right here. When I go to it, and I show you pretty much right here, let me fix all of this. There you go. So as you can see right here, as the market was retracing off of, coming down with this much volume, coming down right here, the market has to retrace, and as you can see right here at the same level as the support of this this triangle, and not only that, have a daily support, which is this red line, daily resistance also. So you have the support of the triangle and the daily resistance of just my chart. You had a doji pop up right there. So it was setting up beautifully. The market was market retraced off of coming down with that volume. You had a indecision candle, representing indecision in the market, and also reversal signs and stuff like that. It was setting up beautiful. This happened at 9 a.m. Eastern time, because this chart starts at Eastern time. 9 a.m. Eastern time. All right, these are 4-hour candles. And then after that, what happens after that? Boom, you get this. And the reason why is because of the FOMC news. This is what kind of threw a lot of people off that wasn't aware of it. And myself, I was not aware of the FOMC news coming out at that time, because if it was, I would have been took profit down here. Remember that big boost come out, because I know as a trader, it is a no-no to trade during two major news events, the FOMC and the non-farm payroll. Anytime those news events coming up, get out of your trades if you're in any. But if you're not in it, you're waiting to take some, wait for that news to hit, and then take your trades after that. All right. So that's basically what happened. That's why everybody got burnt at. That's where everybody got their ass kicked by the news this week. Basically, this little move. So basically, that's what happened. This happened in a matter of seconds, because if we go down to the 1 minute and stuff like that, these candles are still tall. So this news came out pretty much, probably blew a lot of people's accounts and stuff like that. And then, after that, just like anything in Forex, any type of news that comes out is going to correct itself. It's going to correct itself. And that's what happened. Soon after that news hit and stuff like that, the market started to correct itself, going in the direction that it wants to go, especially based off of our technicals. Because, again, Forex is a technically driven market. Forex is a technically driven market. Again, Forex is a technically driven market, okay? So as far as the fundamentals, they don't really take that much of an effect and whatnot. If you want to be more of a fundamental trader, you need to go trade stocks. All right, so like I said, thing was coming down after it corrected itself, and that's pretty much what happened this week. I mean, it's not really much to go into or explain. That's what happened. Like I said, the market was going in the direction it wanted to go in. The FOMC pushed it up, and it kind of delayed the free fall that was going to start. And then after that, it started going in a direction, after this correction, it started going in the direction that it really wanted to go. Okay, so for next week, I mean, basically I have the same thing. It's going to be coming down. It's going to be coming down. So right now, I mean, it still has some room to come down. I feel like the market's it might gap up to come down some more before giving you that actual retracement of this move that's going to make. So let me see. Off of this move right here, it's got to retrace. All right, so we're going to get some type of movement back this way. But as far as when, we just have to see. So my prediction, the market's going to gap up a little bit to come down a little bit further. And then after that, you'll get your retracement before giving you that continuation down. Or who knows, the market could gap down. And if it gaps down, that means it's coming up. And it's going to start its retracement, immediately. And then you already know, after it ends its retracement, somewhere up here or wherever it stops at, I'm going to be ready. I'm getting on that sell and I'm riding that wave all the way down. Because, again, that's where the market's going. That's where the AU wants to go. No major news next week or anything like that, so we won't have to worry about that. We won't have to worry about another fiasco like this. But, yeah, I mean, that's what happened this week. Pretty much FOMC. FOMC is what happened this week. But yeah, other than that, like I said, you got your beautiful descending triangle textbook thing that happened there. So for next week, this is what I predict right here. Market's going to come up, to come down, and it's going to continue to go on this bear run. All right. So again, not really much to get into. So next week, let's go for it. Let's go for it. Let's get into it. All right. So that's all I got. See you guys.
Don't try to make it too hard. We're trying to make it as simple as possible.
Using confluence. So if you see a
bullish pattern instead of a bearish pattern.
They're legitimately going to give you the knowledge to make money for the rest of your life.
Ask questions not out of fear of losing money, but to master the skill.
It's a bear flag.
No.
So if you see a double top and it doesn't follow along with what it should be doing, just sit it out, because if you see one pattern, you're probably going to see another.
Textbook oversold, but that's low. So therefore, it had a lot of. I mean, come on now, that's a lot of volume going down.
Still, they all still mean the same thing. They all mean indecision in the market.
Whenever you're using fib, the real golden things are what I showed you right here and right here.